Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a breakdown of the action in today's session, as well as a look at this week. And stocks sold off hard today, Ed, to cap off what has been a pretty brutal month.
Yeah, we tried to rally a little bit, but once again, that didn't last long. Yeah, tough day, tough week, tough month, tough year, let's face it.
Yeah.
But we're going to talk about a few things. One guy's a long-term investor, Berkshire Hathaway, Warren Buffett's firm. They have earnings tomorrow. Nutrien has earnings on Monday, and we also have Exxon, which now has earnings out of the way.
All right, well, we'll take a look at all of that. But first, let's analyze current market conditions by taking a look at the major indexes. The NASDAQ today closing down 4.2%, the S&P 500 down 3.6%, and the Dow down 2.8%. So heavy losses. And once again, just goes to show you can't take one day in isolation. Thursday's gain, no doubt. If you just look at that one day, it was a great percentage gain, but the trend is not our friend right now.
Yeah, the major indexes never got above their 10-day lines, which should tell you something. It's not really breaking a trend. We undercut the lows on all the major indexes today, not just Thursday's low, but Wednesday's low. The NASDAQ is at its lowest level, since late 2020, I believe. And it's, all the way back there. S&P, I think, had its lowest close since last June, almost at the February lows. Bad week for all those. And you just look on a weekly, you can see how bad they were. We're not in a rally attempt. It just wasn't. And so there is just a lot of work to be done, trying to guess where things are. All you need to know is the trend is very negative. We're going sharply lower. There's big volatile moves, and you should just stay out of the way until the market gets better.
That's right. And going back to the NASDAQ here, we can see how you were saying that undercut of the week's lows, and this week also undercutting its lows from earlier in the year. Not quite for the S&P 500, but also let's take a look at the monthly chart here, which can tell a story, Ed, a decline of almost 13% for the NASDAQ for the month.
Yeah, really, really harsh. I mean, it's like, and that March gain, we had that late March gain that, perked things up. So we had a positive, but it's been a really tough start to the year. This is one of the worst starts in, decades. I'm sure there's all sorts of different measurements depending on the index, but really negative. That's just, again, you just can't overcome that. When the market's in that uptrend, look at this long uptrend. When the market is trending higher, that's when you make money. That's when you almost, even if you don't do a great job, you're probably going to make money. In this, you can do a great job, and it's very hard. And in the last couple of weeks, even the better sectors were getting hit a little bit more. So that's been troubling. You couldn't count on the miners. You couldn't count on some of the other ones. Energy stocks are holding up, which is fine. We'll look at the fertilizer stocks. They're holding up, but they're off their highs. It's just been an extremely difficult time to make money in the market.
It has, and even with the big moves those groups have made, it could take a while for them to digest gains. They could have long basing periods potentially. Not trying to predict, but that could be one scenario. They may not just have a brief breath and continue the same pace that they have been this whole year. It could take a little bit of while, for them to rest. We don't know yet.
Yeah, that's absolutely true.
All right. Well, even though conditions aren't great right now, we still need to keep our watch list fresh and just to continue to analyze charts, because that could uncover the next batch of leadership if and when we do see conditions improve. And let's take a look at BRKB, Berkshire Hathaway. You mentioned earnings due soon. Recently lost support at the 50-day line, but it's in a pretty solid uptrend compared with a lot of stocks out there.
Yeah, it is amazing. You look at that chart, it's done a round trip because it sort of cleared sort of a flattish base. You could sort of argue in that area. It cleared that in early March and had a pretty strong run. I mean, because it had a lot of things going for it. Berkshire is essentially an insurance company that owns a railroad and owns a lot of Apple. And at that time, that was a pretty good mix. Well, all those things don't look so good anymore. And it's round tripped out. So anybody who owned it should have sold it at various points. nonetheless, as you alluded to, its relative strength line is right at highs. I mean, this is the market that's tumbling here. So, there are some reasons. Apple is one of the best looking tech stocks. It still doesn't look good. Insurers could still do well. There's reasons why you still want to be paying attention to Berkshire because it's actually been in a decent uptrend.
So it all comes down to not just the quarterly report, but the reaction to the report as we know. And on top of that, how the market is behaving in order to figure out if Berkshire should remain on our watch lists.
Yeah, I mean, we'll see. It could, because we have the earnings on Saturday and Buffett will have his big annual meeting. So we'll see. This stock could tank and we just sort of put it to the side, or it could continue to at least hold up relatively well. And when the market turns, it could be something to look at. But you're right. We just don't know right now.
All right, well, that makes sense, Ed. And next on our list, we want to take a look at Nutrien NTR. A lot of these fertilizer stocks are set to report their earnings next week, including Nutrien. And the stock had a very strong run, breaking out in February and coming down in April, but trying to find support at a key level with this report due. So a big week for these agricultural stocks with all of them reporting earnings. There could be a lot of action in this group next week.
Yeah, absolutely. Nutrien, Mosaic, and CF. Nutrien is before the open on Monday. Mosaic is after the close, and then a couple days later, CF. They're all trying to find support around the 50-day line. They've had some pretty sharp drops here in the last couple of weeks. I mean, they've sold off hard on Monday, but they did hold around the 50-day line. I think, so that's positive. Obviously tried to move out today. It wasn't the right day to do that. Let's put it that way. And you wouldn't have really wanted to jump on board, right ahead of earnings anyway. But I think it's also interesting. All three of these stocks are sort of trying to find support about where they looked too extended a few months ago, like back in late February, early March. This is when we were struggling. Man, this is starting to look really extended, and suggested maybe you sell out. And then they sold off, but so shortly, and then they ran back up. But here they are. It is sort of interesting how they're all coming back to this spot. I don't know if that's that meaningful. The 50-day line matters more, but it is interesting how they're all coming back and sort of normalizing. But again, we'll see. There's going to be a lot of interesting action, but I don't know how much you'd want to jump on board if they rebound on earnings.
Right.
Given the state of this market, but it's definitely one to watch.
It is. And you make a good point there, Ed. And I know this is something that Scott St. Clair likes to talk about in terms of selling into strength before you see the stock come in, and when the getting's good, when the ducks are quacking, and the stock may go up without you and you may have that regret, but then to see it coming down to the point that you sold, it's like, hey, well, I guess just as well, right? So you have to know your trading style, but I think there's definitely been something to be said about that selling into strength and locking in profits when you can.
Yeah, profits haven't lasted very long this year. That's for sure in most cases.
Yes. All right. Well, last but not least, let's take a look at Exxon Mobil earnings out of the way, as you mentioned. So XOM here, it's holding in a cup with handle. So this is another area of the market, Ed, that we've been paying very close attention to this year. Do you think that this new base is a long enough of a break for Exxon before another potential leg higher?
I mean, it seems like it's long enough. It's been a little while. The 50-day line is caught up to a great extent. It depends on oil prices. I mean, oil prices came off intraday highs. That's one reason why it closed lower. And obviously the market, we've seen that with energy stocks. They'll fall off even if oil prices go up. But, Exxon and Chevron have been huge winners. They usually think of these lumbering giants that just don't keep up with some of the faster shale plays. But I think the refining operations probably help, because I think there's big spreads for like diesel and gasoline. And there's just a lot of things that are going right for them. RS line is at highs on a weekly, almost there on a daily. So nice support here. Again, all depends on the market, both stocks and oil. But it's definitely, this is one that's doing pretty well, has that prior uptrend, definitely a leader that in a leading sector.
Mm-hmm. All right, well, one to watch. And so as we round out the show, Ed, what should investors be thinking about as they prepare for another week of trade?
Well, first I want to mention that the Fed will be meeting this coming week, and that'll be, oh boy, that's probably going to be the center of attention when you have all these earnings. And so we'll see what they have to say on Wednesday, big rate hikes, big other things, and what do they suggest about going forward. But really, I think as Thursday showed, I mean, today showed after Thursday, don't get sucked in by partial rallies, one-day rallies. You just really want to stay on the sidelines unless you just absolutely just dip your toe in there. And if that toe feels cold or too hot, definitely pull it right back. I mean, and that's what you're doing. What you should be doing is watching and staying engaged, because this market could quickly turn. Maybe we're at that point. Fear gauges are starting to come up. So maybe you could see a bottom. I don't know. It might happen next week. It might happen a month or now. But if you're engaged and following and building up your watch lists with stocks with strong RS lines, then you'll be in a good position when the market does really show strength.
Exactly. And you're right. We don't need to be going all in or getting any sort of aggressive exposure on day one of a rally attempt. If we do have a sustained rally and uptrend, there should be plenty of opportunities and time to make money. But you got to be tactical and stay safe out there in the meantime.
Yep, that's absolutely. So stay safe for another week.
Yes. All right. Well, thank you so much, Ed, for all of your insights today, and to everyone for tuning in. Okay, so a couple of announcements for next week. It is the first week of the month, so we have our Swing Trader and Leaderboard Scorecard webinars for subscribers and trialists. So make sure you tune in to get an update on April performance, which the early figures coming in, Swing Trader beating by a big margin. Also, our performance for Leaderboard as well. So we'll talk about the strategies that we use throughout the month of April, what we're seeing in the market now, and what areas could show strength in the months ahead. So make sure you tune into those scorecard episodes. And coming up in about 40 minutes or so, I'm having Stock Tales with Brian Shannon. It'll be great to get his take on what he's seeing in the market, and we'll have him share his screen and talk about a recent trade that he's made. So you can find details on that on my Twitter feed or YouTube channel. I'll see you there, and we will see you right back here next week. Everyone, have a great weekend.